Good morning, everyone. My name's George Hay. I'm Associate Editor of Reuters Breakingviews in London. The theme of this session is Islamic finance themes and opportunities. And we've got an excellent panel here to talk about that. So I'm going to start introducing them now. So at the far end, we have Dr. Mohamed Damak, who is based in Dubai and is Senior Director and Global Head of Islamic Finance at S&P Global Ratings. If you read any article about Islamic finance, there will invariably be a quote from Mohamed in it, so it's great to have him on the panel. Next to him, we have Professor Mohamed Akram Ladin, who is Executive Director of the International Sharia Research Academy for Islamic Finance, or ISRA. ISRA is a leading research center for Islamic finance and is based in Kuala Lumpur. Next to Akram, we have Dr. Bello Lawal Danbatta, who is Secretary General of the Islamic Financial Services Board, also based in Kuala Lumpur. The IFSB is an international standard-setting body for regulators to help ensure the soundness and stability of the sector. And finally, representing Qatar, we have Yousuf Mohamed Al-Jaida, who has been Chief Executive of the Qatar Financial Center since 2015. I'm sure you all know that QFC is all about promoting Qatar as an international business destination at the crossroads between East and West. Right, so given our brief, we should probably start off with some trends. I'm going to start with you, Mohamed. If you could give us a sense for people who just wandered into this room and don't know a great deal about the size of the sector, can you give a sense of where we are globally compared to, say, 5-10 years ago?
Sure. Thank you very much, and very good morning to all of you. If you look at the size of the industry, we're talking about an industry of around $2.2 trillion. Compared with 40 years ago, it was nothing. It started in the middle of the 70s with the creation of the Dubai Islamic banks and other leading Islamic banks. Now, between the phase of 1975 to almost to 2010, the industry was growing at double digit. And more recently, the industry has slowed down. We estimate the growth for 2019 to be around mid-single digit, and we expect for 2020 another mid-single digit performance. And the reason for that is quite simple. The industry is concentrated by geography and by business line. By geography, there's like 80% of the industry assets are here in the GCC, Iran and Malaysia, and I'll add to that Turkey. And if you look at the performance of these countries over the last couple of years, it hasn't been what we have observed during the commodities super cycle. The growth of the GCC country has slowed down. The growth of Iran went deeply into negative territories when the sanctions of the US were reinstated. The growth of Turkey went to negative territories last year. And because of the concentration of the industry in these countries, obviously the growth of the industry came down. Now there's few good news in there, or few bright spots. One of them is Malaysia, where the growth has continued to be consistently positive over the last few years. And even though Malaysia has been through a significant political change recently, I think the industry continued to grow quite rapidly. The other good bright spot is the Sukuk market. In 2017, we've observed a significant increase in the volume of issuance. That was followed by stagnation in 2018, and now the growth is picking up again. I think year to date, the market has seen a performance of more than 30%, what we have observed in 2018. But this was for the wrong reasons. Why I'm saying wrong reasons, it's because the growth was not coming from the core issuers of Sukuk, or the issuers in core countries in the GCC, for example, where we have observed a drop in the contribution of Sukuk in the funding mix of the GCC issuers. The growth was coming from the Central Bank of Indonesia, where they decided to offer Sukuk as liquidity management instrument for their banks, and the growth was also coming from Turkey, where the country has been trying to open all the financing, external financing avenues possible in order to fund its economy.
Okay, well that's a great introduction. Akram, what's your kind of view from Malaysia? We touched on that a little bit there, but maybe you could expand on that.
Okay. Thank you, George. And first, I would like to thank the organizer for inviting me to this forum, this wonderful forum. Now, talking about Malaysia, of course, I mean, we started our Islamic finance in 1983 with, the first Islamic bank. And then we have the takaful industry, 1984. And then after that, of course, the capital market has fly. At the moment, in terms of size, for the Islamic banking asset, we have about 35%, almost 35%, up to 2019. Now, we are coming to the end of the year, and the target that was set by the central bank for 2020 is that the Islamic banking asset will go up to 40%. That is a target that was set by the regulator. Now, in terms of sukuk issuance, I would say that Malaysia, as mentioned by Damak, is one of the biggest issuer in which the value is about 13.9 billion or 35.1% of the US 39.5 billion issued in the first quarter and the 31st March. This is based on the statistic. And if you look domestically, you see the issuance of sukuk in Malaysia has surpassed the issuance of conventional bond, right, in which in the local market at the moment we have about 60% of the total issuance are sukuk. In terms of takaful, the Islamic insurance is still relatively small. It's about 13.1% at the moment, you see, but it is slowly increasing. And I believe that, this is very much because of the robust infrastructure that we have in Malaysia, because of the in Malaysia, I would say that relatively it is, top-down approach, where the regulator and the government really push, for Islamic finance. And even if you look into the government issuance, you see many of the government's issuance, they are using Islamic instrument in order to issue the Islamic finance instrument. Okay. Thank you.
So, Bello, what about the regulatory trends that we should know about?
Thank you. Bismillahirrahmanirrahim. And I also want to thank the organizers for this invitation. It was really a great forum and a very informative one. I will talk globally as a standard setting body because for the benefit of the audience, IFSB is a global standard setting body. And we have membership from 57 countries, basically. And then currently in the IFSB membership, we have 79 regulatory and supervisory authorities, including QFC is one of our members. We have the international organizations like the World Bank, the IMF, and the, of course, the UNDP, Islamic Development Bank. They are all members of the IFSB. Now, as an introduction in terms of trend, we have seen Islamic banking and finance growing from a niche market to a more systemic, important market in quite a number of jurisdictions. To build on the statistics that has been highlighted by Dr. Mohamad is basically the Islamic banking asset is currently standing at 1.7 trillion in a way for the banking. And then for outstanding issuances of sukuk as of last year is about 470 billion US, while the takaful industry is relatively smaller in terms of size, but in terms of growth rate is quite stable and is one of the fastest growing, is about 48 billion US dollar. Now, the issue that we have in terms of the trend, we see the growth trend in terms of the banking sector is shrinking, going down and down. Right. But while the sukuk market or the Islamic capital market sector is growing much more faster. But I will disagree with Mama that the growth is for a good reason, I think, not for a bad reason. Because what we are looking at, currently we have Islamic banking and finance in 61 countries. It started at a very small, we have concentration within. So we want to see that the issuances, the expansion of Islamic finance and Islamic banking services and Islamic insurance going across many jurisdictions. We have, we don't want to be confined to traditional jurisdictions or geographical regions that we know. Right. Because what we want to see people looking at Islamic finance to argue Islamic finance from an economic value perspective rather than kind of just a religious or some kind of alternative finance. We have seen now Islamic finance is no longer called as alternative finance, but it's rather a participatory finance, ethical finance, and so on. And it's becoming a mainstream finance anywhere you go around the globe. So I think in terms of the regulation, the regulators, based on the number that I have given you, and based on the activities that we are currently doing, is also, we are at par with the conventional regulators, both in Islamic capital market, in capital market, banking, and insurance. So I think this is some kind of introduction that I would like to share. Yep.
Okay, and last but not least, Yousuf, would you like to lay out what the picture looks like from Qatar?
Yeah, thank you for having me. I want to welcome everybody to the Islamic financial city of the region, Doha. So welcome to the Doha Forum. And I want to welcome the panelists and appreciate really their presence in Doha to participate in this panel. I want to start with Qatar. If you look at the fundamentals in Qatar from an Islamic financial perspective, the numbers are healthy. We have $127 billion of Islamic financial assets. Most of that is concentrated in Islamic banking, $107 billion. We have a moderate, kind of small size of takaful industry. It's around $1 billion. And we have $3 billion of sukuk issuances in this year, and outstanding sukuks of $20 billion. So the fundamentals are healthy for the Qatari market. That represents 33% of the conventional market, which is a very interesting ratio, and indicates that a significant amount of your commercial transactions are skewed towards still the conventional, but the Islamic financial activities are catching up. So we believe in Qatar, in the Qatar Financial Center, and when I took over in 2015, the biggest dilemma I had is how do you compete with other financial centers and what kind of financial activities can you attract into Qatar, having multiple financial centers in the region competing. So the plain vanilla financial activities of attracting banks and asset management, I think, was going to be a tough sell. We believe that the fundamentals for a healthy Islamic financial city in Doha do exist, whether it's the assets, whether it's the infrastructure. We have one of the youngest Islamic college universities in the region that's been doing very well on the educational front. But we also have the infrastructure in terms of regulatory, legal, and business requirements through the Qatar Financial Center, which is quite independent from mainland Doha when it comes to our international best rules and regulations. So the educational part is there, the infrastructure part is there, the significant assets in terms of Islamic financial activities. The question is, what do we do with all that? We've set a very ambitious vision, and that vision is to reach out to Malaysia and Turkey and create some sort of consortium for Islamic financial activities. And the vision is simple. We believe that Islamic financial activities should be led by Muslim countries. There was a couple of attempts in London. Malaysia's done a wonderful job. But I think Malaysia is doing wonderful for the Asian continent. We're leaving out the MENA and the European part. We believe Turkey is well established to become a gateway into Europe. We believe Doha is very well positioned for the MENA region. And Malaysia has done a wonderful job in terms of accessing the Asian continent. If we put our heads together and share technology and come up with regulatory requirements and passporting mechanisms, we believe that these three countries can dominate the entire Islamic financial market globally. So these are plans we've set in place. We've reached out to Labuan and Istanbul Financial Center. We've actually signed an MOU recently with the President's Office to enable for sharing of regulations, rules and regulations between the Qatar Financial Center and Turkey. And we're soon, with Dr. Mahathir's office, also gonna reach out to the Malaysians and sign an MOU of some sort. And the next Islamic meeting that's happening in Kuala Lumpur. So ambitious plans. We believe the fundamentals are there. And we believe Doha is very well positioned for the MENA region.
Okay, so we've got some interesting ideas about how to grow the sector, and that's kind of leads naturally onto opportunities. So I suppose, Mohamed, I mean, there's been some comment already about how initiatives to grow the sector. What do you think are the key drivers from your perspective?
Sure. I think at S&P Global we've identified 3 potential accelerators for the Islamic financial industry. The first one is inclusive standardization, and I underline the word inclusive because last year, for example, one of the standard setters came with some proposals that could have had significant negative impact on the sukuk market. So standardization is necessary.
Which one was that, sorry?
It's the Accounting and Auditing Organization for Islamic Financial Institutions. They
Maybe I
came
shouldn't
with
ask.
some proposals. They came with some proposals on how to structure sukuk, on the independence of SPV, on the transfer of the underlying assets at their fair value, et cetera, et cetera. So something that was completely disconnected from the market. I understand that they are in the process of factoring the comments they received from the market in the final standard. But inclusive standardization is key because if you go and speak with an issuer that has never issued a sukuk, they would look at the process. You need to adjust to a legal environment. You need to identify an underlying asset. You need to identify a structure, put together legal documents of 500 pages, and then eventually end up tapping the market.
So it's also presumably higher cost as well.
Exactly. Compare that with a situation where, as the Minister of Finance, you just have to take a standard legal document, put your signature, and hit the market. And the choice is easily and rapidly made. And if you recall, in 2015, when the oil prices started to drop, a lot of people watching the sukuk market were expecting a windfall of sukuk issuance, arguing that the GCC countries would be under pressure, they would have a natural preference for the sukuk. The windfall happened, but it happened in the conventional market. It didn't happen in the sukuk market because the process was much more complex. So inclusive standardization is the first accelerator. Second accelerator is fintech, and here for sukuk issuance, I think where fintech could make a difference is with the usage of the blockchain technology in structuring sukuk, because blockchain could resolve 3 problems that the sukuk market faces today, which are the traceability of the underlying assets, the traceability of the investor base, and the traceability of the cash flows. So using blockchain could revolutionize the way sukuk are done in the market. And the third accelerator is, at S&P Global, we did a simple exercise. We put on the one side the 5 principles of Islamic finance, and on the other side we put the Sustainable Development Goals, we put the ESG principle, and we saw some natural connection between the ESG and Islamic finance. For the E factor, for example, the low-hanging fruit would be the green sukuk, although the added value of the green sukuk is yet to be demonstrated, and I'll quote the CFO of Majid Al Futtaim, which is a diversified group in the UAE that has issued green sukuk twice, and that said that it didn't translate into a pricing advantage as they would have expected. So the green sukuk is the low-hanging fruit, especially if you take that into consideration with all the objective of some of the GCC countries in terms of renewable energy contribution. Even Malaysia has a good, an ambitious objective in terms of the contribution of renewable energy. The second low-hanging fruit is for the governance. For the governance, Islamic banks and sukuk are by definition subject to another layer of governance compared with the conventional, which is the Sharia governance. The problem is that it didn't translate into the market discipline you would expect from this additional layer. And the reason is simple, because the finding of the Sharia audits are never shared publicly. So this is why some of the regulators, I know that Malaysia has been pushing in the sense of adopting external Sharia audit and publishing the results of the Sharia audit. And the final aspect, which is the social aspect of the equation, which we would like to call the missing S, because by definition, Islamic finance and Islamic economy have the instrument to fulfill this S or social objective. The zakat, for example, the waqf, which reportedly the number for waqf is much, much bigger than the industry itself. But the problem there is that these instruments have not been leveraged properly in Islamic finance. And when I say leverage, don't get me wrong, what I want to avoid is that people, and we've seen some calls in that direction, people using zakat or waqf as a first loss tranche to support private sector money, which is certainly not the reason why waqf was created in the first place.
Right, okay, interesting. Mr. Akram, from a Malaysian perspective, what do you think are the key drivers? Do you agree with those drivers? Do you think there are other more important things?
All right. I would like just to continue a little bit what Mohamad has been saying. I mean, first, when we talk about the standardization, you see, being a Sharia expert, sitting on several Sharia board, having a kind of, not to say standardized view, but very much on harmonization of Sharia view is also very important across the jurisdiction. Because sometimes I think one of the peculiarities that we can see in the market is that one particular product, let's say it is being approved by one Sharia board, but it is not acceptable by another Sharia board. This will, of course, hinder the progress of the market. That's why I would urge, more interaction between the scholars, particularly, and also between the scholars and also the practitioners. I think this is important. You see, in order for the scholars to understand what is the reality on the ground, and with this kind of interaction, harmonization of view, you see, can be achieved. Now, talking about the ESG, SDG, if you look into the development of Islamic finance, I believe that since inception until now, the focus has always been to come up with the Sharia compliant products, meaning that the halal product, you see, to remove, all the elements which are considered as non-halal and to offer a halal product. But the trend nowadays, you see, people are questioning what is the value proposition of Islamic finance. You see, and the tendency is that to try to compare between what is offered by Islamic finance and the conventional. If you look into the pricing mechanism, for example, sometimes people tend to compare, if I take a conventional loan, I take an Islamic financing, you see, at the end of the day, how much will I pay? Is this more expensive than this and whatnot? So this is the kind of comparison that people are making, you see. So we need to really emphasize on the value proposition of Islamic finance. And here comes the role of ESG, SDGs and whatnot. And I believe that now the trend in the market is that, we are pushing towards this. I have several discussions earlier on with FTSE in London, for example, in the equity screening. You see, apart from the usual, you see, Sharia perimeter that is being used. So now there is the SDGs or ESGs perimeter that we are integrating into the screening. Not to say that the equity is non-compliant, but then this is an added value which I believe that people in the market will really appreciate it. Now, on the other aspect is the integration between Islamic finance, whether banking, capital market, takaful and whatnot, with other social nets in Islam. You see, Damak mentioned about the mentioned about the wakaf and also zakah. At the moment, we can see that there is this connection. You see, banking, and the expectation of people is that, when they embrace Islamic finance, they expect that Islamic finance can solve all the economic issues that is facing the Muslim Ummah and also the world. That is not the case, because Islamic finance is only one part of the entire Islamic economic or social netting that is available. So it is very important for us to connect. If you have time, perhaps I will further explain some of the efforts that we have been doing in Malaysia, particularly to connect between different instruments that is available.
Why don't we bring in Bello at the moment, because you were talking about the importance of harmonization and standardization. Is that an easy thing to do? I mean, how it doesn't sound particularly so.
Well, I mean, harmonization is achievable, but standardization is achievable as well, but more challenging.
How do you define the difference, incidentally?
All right. When you are standardizing, it's like you are saying that every jurisdictions need to follow some kind of similar checklist. While based on the Islamic school of thought, which we have four, there are divergence of opinions in terms of the way the scholars view things. Right. So what one aspect is agreeable or acceptable by the other one is not acceptable. But harmonization, I think, is achievable, is doable, because it's all about understanding what is the common goals and then what is the common expected outcome. Now, but reflecting on the points in terms of the drivers for the Islamic finance industry I think it's well articulated by Brother Mohammed, in the sense that financial inclusion is one, ESG is another, and then I think what I wanted to add, Islamic social finance is another. But what I wanted to add here is more on the social responsible investment as well, which is something that is very, very well encompassing in terms of this Islamic social finance as well as the ESG that we are talking about. Fintech, yes, is really, really a driver that will drive the development of Islamic finance, but it comes with its own new challenges, particularly technology in general, not only fintech, whether you are talking about blockchain or AI or robotics or whatever that we are talking about. Because in the sense that typically the application of fintech now come with a new set of risk that we as a regulator, as a standard setting body, we are very much concerned about. Now, financial inclusion is necessary. That's why we just issued last week the first global technical note on financial inclusion issued by IFSB on prudential regulation. And in that particular technical note, we cover Islamic microfinance, fintech, collective investment schemes, as well as Islamic social finance. We are talking about zakat, waqf, and sadaqah. But what we are concerned is the application of technology in delivering this kind of services, because there will be potentially third-party risk. Because the banks are not technology experts, they are not AI experts. And then now yesterday's debate in one of the forum in terms of technology and governance, there was some kind of, I can understand why the technology companies are now focusing more on the principles, which are very, very difficult to achieve, because they said we cannot regulate technology until we agree on the principles. Yeah. Now, for financial sector, we already know our principle. It's all about consumer protection. It's all about level playing field. It's all about returns as well, and good governance. So we cannot rely so much on technology to deliver financial inclusion without having a proper assessment of the risks, because the banks now potentially will be exposed to a new set of risks that is beyond their control, because they don't have. So the key driver that will drive the Islamic finance industry forward is more about the capacity. The capacity building of the regulators is essential. The capacity building of the regulators and the marketplace is all essential. So this is one aspect that I see will support in terms of achieving harmonization, as well as to some extent standardization. And then liquidity management instruments and the right infrastructures are also another key driver, because there has been an outstanding challenge in many new jurisdictions. While some jurisdictions are matured markets, emerging jurisdictions or new markets are having challenges in terms of the liquidity management instrument. Because, I mean, in the IFSB membership, as I mentioned, we have 184 members, 79 regulatory and supervisory authorities, and then 8 international organizations and 95 market players. There are jurisdictions like Luxembourg, Germany, and so on, and UK, of course. They have embraced Islamic finance, and there is high aspirations to become a hub in their region. But there are these challenges that really will drive the growth of that particular industry, which basically is the liquidity management instrument and the capacity as well of both the regulators and the marketplace.
Right. Okay.
So I think this is the perspective that I'm looking at.
Okay. Well, Yousuf, Mohamed was talking about earlier in 2015, 2016, everyone was expecting a kind of increase in Sukuk issuance because of the oil price collapsing. Do you see any kind of macro drivers for kind of increased issuance in the GCC from where we currently are? Because, globally the macro picture isn't great. Or are there any other drivers that you would point to?
Let me just touch upon real quick fintech. I think it's a growing landscape within the Islamic financial industry. If you look at the numbers, it's a very small percentage currently. 1% of the entire fintech landscape is Islamic fintech, which says that could be interpreted that there is a massive opportunity for Islamic fintech. There's currently, if you look at the landscape, there's currently 121 companies. We've seen companies recently doing robo-advisors, blockchain, P2P lending, a lot of remittances, mobile payments. So I think it's a growing trend. And financial inclusion is definitely going to be one of the areas that fintech is going to touch upon and improve upon. Because there's massive Muslim populations in several Muslim countries that are unbanked, and the only solutions, it seems, is that fintech is banking those populations. In terms of Sukuk issuances, and fintech can, of course, to micro Sukuk products and also cater for that segment. In terms of Sukuk issuances, yes, I think you're going to start seeing growth, and the reason is simple, is because if you look at the oil prices currently, they're around 50 and 60. A lot of these governments did not foresee a very long period, especially in the GCC, of a 50, 60 level. They've adapted recently.
Yep.
But if you look at the deficits in the GCC, they're quite enormous compared to the last decade.
Yep.
I mean, if you look at Saudi Arabia itself, it's a $50 billion deficit. So
And
definitely,
that has quite a big Islamic finance part of its market, right?
definitely, definitely. And you know, the Aramco IPO catered for 50% of that deficit, but you know, you kind of question where's the other $25 billion going to come from, and apparently issuances of Sukuk is going to have a major role in terms of funding a lot of the deficits in the region. Qatar is probably one of the lucky countries. We have a surplus this year. We've had a surplus, barely a surplus last year, but a surplus this year definitely. So maybe less issuances of Sukuk for government purposes, but we've seen recently the $300 million Sukuk of the Qatar International Islamic Bank, very successful, listed on the London Stock Exchange, oversubscribed to 2.6 billion. Tier 1, quite innovative, and it was very successful. We've seen recently the first merger ever in the, correct me if I'm wrong, between a commercial bank and an Islamic bank in Qatar, IBQ and Barwa Bank, resulting in one of the biggest Islamic financial institutions in the region.
Right.
So there's quite innovation happening in the Islamic financial industry. The question is, again, going back to harmonization, I don't think one country can do it alone. I think, you know, these Muslim minds have to get together and share technology and basically work together towards a common vision. Again, like I said, I think a lot of the countries need to leverage off what Malaysia has done. But again, Turkey is a massive Muslim population. Indonesia is massive. Doha is small, but with the soft power, I think we can launch a lot of these initiatives and lead a lot of these initiatives. So I'm quite optimistic when it comes to the development of the industry.
So, Mohamed, do you kind of agree with the idea that Turkey and Qatar, and the kind of stuff that Yousuf was talking about, as you know, Muslim countries really driving this, or can we see? Should we look to kind of growth opportunities in London, Hong Kong, kind of other areas that we haven't talked about so much so far?
Sure. We will continue to see some growth opportunities in other non-Muslim countries, but I agree that the core of the core driver of growth would be the Muslim countries themselves. whether it's the GCC, whether it's in Iran, whether it's in Turkey. I think this is where the regulators are pushing and are creating the necessary ecosystem for the Islamic finance industry to prosper. What we have observed in the UK, yes, there was a regulatory framework put in place. There was a mini sukuk issued by the UK government in 2014, coming to maturity in 2019, will likely be replaced, but £200 million, it's nothing. I know few investors that wanted to buy the full sukuk and that made an offer to the UK government when they issued, and they said, okay, here's 1 billion on the table, give me the whole sukuk. Hong Kong, I think they've issued 3 times 1 billion sukuk over the last 3 or 4 years. The sukuk was pretty successful. When they started to issue, they were rated AAA. The only sukuk that were rated AAA are the sukuk issued by the Islamic Development Bank at that time. So there was some interest from the official investors and the central banks of the world to put their money in the Hong Kong sukuk.
But I mean, I suppose in London, no one can talk about anything other than Brexit, and Hong Kong, no one can talk about anything other than the unrest there. So presumably, I mean, do you have much kind of confidence that we'll see further issuance there, or as you say, is it more likely to be driven by what's happening here?
Right. I think London, it was announced. It was announced by the Chancellor in September. They said on the record that when the sukuk will come to maturity, it will be replaced by another sukuk. They didn't mention what would be the amount, but they said it would be replaced by another sukuk. Hong Kong, the early indication is that, yeah, if there's an opportunity, they would definitely look into it. And I think after issuing 3 or 4 sukuk, you become used to the process, and it no longer takes you the amount of time it used to take you when you first started looking at the instrument.
Right. Well, Boris Johnson has got some Turkish ancestry somewhere in his background, so maybe that will be a key driver of this market. But
yeah, but if you want to talk about the Brexit, I think the Brexit, now that the probability of a no-deal Brexit is declining.
Yeah.
But few months ago, when the probability of no-deal Brexit was quite significant, I think some of the Islamic banks were under pressure, not so much from a liquidity perspective, because the funding is mainly coming from the customer deposit, so it's core, it's going to stay there. Even if the financial markets are disrupted, they won't be impacted. But because of their exposure to the real estate sector on the asset side, more than 50% of the balance sheet of the Islamic banks in the UK is made of exposure to the real estate sector.
Right.
And with the drop of the real estate prices, they would have definitely had some negative impact on their profitability and their capitalization.
that's absolutely true. So just a kind of general question for anyone on the panel. I mean, we were talking about ESG there, and there certainly seems to be kind of synergies between Islamic finance and non-Islamic finance in terms of negative screening, because you screen out stuff that you can't invest in. How much of it? I mean, the issue with ESG though is that it's not just about negative screening. It's all about kind of engagement, and a lot of the E part of it, the green part of it, is to do with kind of hitting the Paris targets and all that kind of stuff. So, how much of a challenge is it for the sector that, I mean, by definition, a lot of the issuers of sukuks are in this part of the world, and they're very focused, understandably, on oil revenues. So how much of that is a problem for going forward? Do you have any thoughts, Akram?
Well, I would like to talk, from the Sharia point of view, right? I mean, if you look, from the Sharia point of view, you talk about ESG, all these values, actually it is embedded within the very principle of Islamic finance itself. You see, that is the reason why whenever we are being brought with the discussion about, all the values related to ESG, initially it is supposed to be embedded from the very beginning. You see, it is not something which is added into the current screening. So that is the reason why, you see, from the Sharia point of view, it is very much into it. You see, so we have to embrace it, you see, especially now. And I think more and more index providers are looking into embedding, the ESG into the existing screening process. Okay, one thing that I would like to emphasize about the governance, you see, we see that there is this Dana gas issue earlier on, right? Yeah. Okay, if you look into the trend at the moment, you see the problem with Dana gas is that, they, quote unquote, manipulated the Sharia pronouncement and say that, you see, when it was pronounced, it was in line with Sharia, and later on, it is not in line with Sharia. You see, whereas, that nothing has changed actually. Yeah. If you look into the situation, nothing has changed, but because they have some problem in paying back to the investors, so they try to find loopholes there and here. You see, so if you can look into the governance process at the moment, I can see that more awareness is there, particularly in the issuance of sukuk in order to avoid what happened to Dana gas. For example, the parties agree. It is stated in the documents that the party agree that not to dispute the Sharia pronouncement of the issuance at any point of the sukuk. So, this is something, I would like to say that, it is a risk mitigation kind of step that has been taken. And perhaps, this is one of the aspects that we really need to look into it, because otherwise it might jeopardize the industry as a whole.
Okay, well, Mohamed's going to say something. While he is, if everyone can have a think about whether they want to ask any questions. But
yeah, on the Dana gas, I think what happened, the change in the legal documents happened after the Dana gas case. But before talking about Dana gas, let me answer your question. I think what needs to happen in the industry is we move from a negative screening mindset, what is Sharia compliant, what is not Sharia compliant, to a positive screening, what is Sharia compliant and adds value. Right. And this is exactly what Malaysia is trying to achieve with the value-based intermediation framework that they put in place last year, I think. Now, on the Dana gas, we knew that it's not an issue that is related to Sharia compliance. Dana gas was trying to restructure its debt, tried one time, tried second time, couldn't go through. So they decided to pull the magical argument out of their hat and say, okay, our sukuk is no longer Sharia compliant. Let me force your creditors to the negotiation table. But what happened in between is that when the sukuk was trading at 40 or 45 cents to the dollar, it was bought by two Western investors. Don't ask me the names. It was bought by two Western investors that had an army of lawyers, literally looking at the legal documents and coming to the conclusion that you go to the English court, you're going to have a judgment in your favor. And this is exactly what happened.
Let's just hold there. We can talk about this more, and maybe people have some questions. Does anyone have any questions? Right, the gentleman over there, first of all. Do you want to talk into there? Just introduce yourself and talk into the microphone, if that's all right.
Mohamed Mustaqim from London. I was a councillor for one of the London borough. And it's very good, and thank you so much for your beautiful presentation. But my question is, in recent times, in Muslim community in Western Europe are increasingly interested to go to, Islamic finance for their housing, for their, business transactions. But what we have seen, I don't know what's the reason behind, but the bank is only one bank, but the other banks, sometimes they are not permitted to go into the market, sometimes probably the regulation, but we want to know why, despite populations are interested, but why banking sector are not opening their door to embrace people who are interested to have their Islamic transaction. Thank you so much.
Does anyone have any opinions on that? Bello, would you like to?
All right. You made a very good question, a very important point, actually. We have two biggest Islamic banking and finance, or two biggest Muslim population country, in which the market share is just 5% of Islamic banking, while the total population is 95%, all right, to 99%. So that's the question that people always ask. Why this big disparity? 99% of the populations are all Muslim, but the Islamic banking asset in terms of market share is only 5%. There are multiple reasons for that. One of the reasons is basically the kind of products that they are offering in the market, which are basically debt created, which makes the customers find it difficult to differentiate between a conventional banking and the Islamic banking products. This could be one of the reasons. Secondly, is actually the attitude of the commercial banks to be in their comfort zone, not going outside, to be in line with the principles of Sharia, to participate into, to have more diversified kind of products that are participatory, that are profit sharing in nature. Which to the extent that this is where, in some countries like Malaysia, they have advanced because they are moving from now just Sharia compliance to Sharia excellence. So the Islamic financial institutions doesn't want to take extra risk in moving forward. And that's why if you look at the FSB stability report, the year-on-year growth for the Islamic banking assets 2017-2018 is just 0.9%. That tells a lot of stories, which shows that the Islamic banking is not growing. But while the capital market sector is growing by 27 to close to 30% year-on-year growth, and the Takapul also 4.3. So the readiness of the commercial banks or the Islamic banks to take the Islamic banking into its original philosophy by differentiating the services and of course the product that they are providing that's one of the major reasons. And at the same time as well, in terms of efficiency, they are not as efficient as the conventional banking system. Customers now of today's financial services are majority millennials and then very impatient. There are people who go for efficient services. So their capacity as well is in coming up with, this kind of efficiency is a challenge. Okay, and likewise, it will still go back to...
I just wanted to be aware of the time. We're probably going to bring in this question. We can keep on talking about this. Next gentleman.
Yes, hi. I'm Riaz Naqshbandi from American University, Kogar School of Business in Washington, D.C. I came back to academia after 25 years in the conventional system of finance. I introduced the first Islamic finance certificate in the US of A. Actually, I came from DC just to share with you these views. But basically, my question to you, why the Islamic finance industry has been ignoring North America for so long? That's number one. Number two, to me, Islamic finance is not for Muslims only, it is for humanity. Number three, unfortunately, I am a GCC expert. 9 out of 10 guys who deal with Islamic finance, they have no clue of how to establish Islamic finance operation. And I am working on that single-handedly. But my question to you again, why you are ignoring tremendous market in the United States of America, especially in the area of Sukuk. They are dying to get financing for their infrastructure and education. Thank you.
Mohamed, would you like to field that one?
Yeah. Why ignoring North America? I don't think the industry is ignoring North America. There is an Islamic bank, Lariba Bank. There have been a couple of issuance of Sukuk by American companies. GE is one of them, and Goldman Sachs also issued the Sukuk. It all comes down to the opportunity. And coming back to your question, I have a slightly different view compared with Dr. Bello. I think the Islamic banks are, at the end of the day, commercial enterprises. So if you don't have a regular income, if you don't meet their selection criteria, you would be out. This is the first reason. Second reason, assuming that the client meets the criteria, one of the arguments that we hear frequently is that Islamic banks are slightly more expensive than the conventional banks, which means that the client will have the choice between the two and will decide to go with the conventional, even though deep down in himself, he would like to work with the Islamic bank. And they are more expensive because of the lack of standardization, because of all the issues, the complexity related to putting together an Islamic product versus a conventional product. So these are the two main reasons, in my view, that explain what you talked about.
Akram, would you like to come in?
Just to add, I mean, when you talk about expanding Islamic finance to non-Muslim, I think one of the good examples we have is Malaysia. You see, if you look into some of the banks in Malaysia, all right, I mean, we have more non-Muslim client compared to Muslim client. And you can have Hong Leong Bank, public bank. I mean, Chinese name, I would say. You have Hong Leong Islamic, public Islamic and whatnot. So at the end of the day, I believe that we need to educate, you see, to the non-Muslim. And when you talk about good values, right? I mean, this is one of the things that we really need to capitalize. We talk about ethics, moral, banking and whatnot. I mean, Islam have all that. And another thing I would like to suggest, you see, to everybody, please stop using Arabic names for Islamic product if you are in a market where you want to market your product to the non-Muslim. At one time, I was advising one of the fund in Singapore. Singapore, you know, I mean, most of them are non-Muslims. So they start putting Arabic name, and I tell them, please, change the name. You see, when they start putting Arabic name, nobody come to buy to invest in the fund.
Okay,
you see, but the moment they change it, then
that's pretty
boom,
clear message. We need to internationalize it.
Okay,
right,
so please.
I'm really sorry that everyone, other people who want to ask questions, but I'm afraid we've got to stop it there because other people have got to come in here and we've got to move on. But thanks so much for everyone attending, and please give a round of applause for our excellent panel.